Hello everyone, welcome back to our channel and thanks for tuning in. Today we are going to explore a unique product from one of the Indian fintech companies, and this product is probably one of the jugaad products that is made for India in India. The company is Paytm and the product is the small soundbox that we see nowadays wherever we go and make an UPI payment in a small retailer shop. Let's take a digital payments industry for an example. A fierce battle has been unfolding here with many players vying for the top spot. Paytm, though, is a pioneer in this space, found its market share under threat from heavy hitters like Google Pay and PhonePe and many others. However, in spite of all this competition, Paytm has managed to grow their revenues significantly in the last couple of years. In this video, I want to take a dig at this jugaad product idea from Paytm and how it helped the company grow its revenues and merchant base significantly in the last few years. Not only that, this simple device and this simple product idea has been a game changer for the company's financial performance in the last few years. When we examine the company's revenue segment, we find it essentially operates within two segments, that is, individuals like you and me and the merchants. The individual consumers are ordinary people like you and me who utilize the payment app for multitude of services. These services range from recharging prepaid phones to booking things, whether it is flight tickets or movie tickets or recharging for a mobile and etc. Whenever we do that, Paytm charges commission, and that forms their significant portion of revenue stream. In addition to this, Paytm also diversified its offerings to include personal loans and other financial services, which are provided through different lending partners. Each transaction or every transaction that happens through Paytm app on the financial service side, it also provides another opportunity for the company to make money there. Tuning into the merchant segment, the company has designed an array of services to accommodate different business scales. For basic level merchants, for example, the local food street vendor or vegetable seller who transacts through QR code, the company does not make any direct revenue from this. It's more like that using this to increase their distribution, increase their network. However, as we traverse the merchant spectrum towards small retailers, the company's revenue model begins to kick in. I mean, Paytm provides these businesses with sound boxes, and they charge some kind of monthly subscription to it, and thus generates recurring revenue for it. Moving up from mid and large scale retailers, they avail themselves more of advanced services such as POS machines, point of sale machines, and also a Paytm gateway for online transactions where the company earns some kind of commission for every transaction. They also partner with online merchants, which allows the company to earn transaction fees from array of bookings, including flight tickets, movie tickets, and more. The effectiveness of two-pronged approach is very clear when we look at the company's growth metrics. As per the recent financial report, the company stated that the merchant base has increased close to 26.7 million merchants, and sound boxes that's been deployed to different merchants, and 6 million sound boxes that's been deployed. This has significantly boosted the company's subscription revenues. A brief examination on the company's financials reveals a consistent upward trajectory. I mean, for example, if you look at the last fiscal year, the company has posted a growth of close to 46%, and then the recent financial year in March 2023, the growth rate has further increased to approximately 55% when compared to the previous fiscal year. This prompts a question: what are the key factors that are driving the company's robust growth? With a rough estimate, even if we consider a monthly subscription fee of around 100 rupees for 6 million devices, it results in approximate monthly recurring revenue for the company of about 60 crores for the company. When extrapolated this over the course of a year, Paytm is making close to 700 crores solely on selling these sound boxes on a monthly subscription basis. Consider a scenario where if the sound box was not there, and if this 700 crores odd revenue has to be removed from the company's profit and loss statement, the growth rate would experience a significant drop from almost 56% to 35% in the recent financial year. The implementation of the Soundbox subscription idea by Paytm has not only augmented subscription revenue for the company, but also facilitated company's expansion into other financial areas. But how exactly? To understand this, we need to comprehend the digital transformation and the financialization of the country enabled by platforms like India Tech Stack and UPI. Paytm, along with other payment apps, has invested significant amount of money to build the distribution network through the payment apps, which later they hope they would monetize through different financial services. The distribution network forms the bedrock for their operations. Let's take an instance of a small or medium-sized merchant who is making maybe 50 or 75 UPI transactions in a day. Payment apps like Paytm or PhonePe utilize this data to offer some small working capital loans to these small merchants, which otherwise for them to get these loans would be very difficult. The lack of reliable data make it very risky for any bank to lend any kind of money to this small or medium sized merchant, which is the gap all these payment apps is trying to fill in. With all this digital transaction that is happening through different payment apps like Paytm or PhonePe, privy to a lot of digital transaction data. Say a small vendor or a medium-sized vendor, over a period of time they have a history of transaction that the small merchant is doing, and based on the data they can collaborate with different lending partner, or they themselves can act like an NBFC and give smaller working capital loans to these smaller medium-sized merchants, which otherwise for even for these merchants it's very difficult for them to get it. It could be loans ranging from say tens of thousands of rupees to maybe a lakh. This is a very significant change if you look at it from the merchant point of view, because if I'm a small or medium-sized merchant, and if I need a quick 20,000 or 30,000 loan to pay to a wholesaler to get some goods, or for whatever reason it may be, this will help me significantly to run my business on a day-to-day basis, and also it is helping a lot of the small merchants to get their business going on up and running. This product addressed, in my opinion, some of the two key psychological traits. That is, it kind of tried to bridge the gap between low trust and also the convenience. India is still a low trust society. We needed confirmation for everything, whether it's an SMS or a message or anything of that sort, and this product addressed that. So that Soundbox solved these two traits, the low trust and the convenience. The point of this video is to understand how this unique idea of Paytm, how they managed to generate so much of revenue with such a small idea, by understanding the psychological traits of the society, by understanding the needs of the end customer and what the problem that they're really facing, and implementing a very simple solution can generate so much of money. So this is some of the things that I thought it's very interesting. I hope you find it interesting. Thank you for watching. I'll see you in the next video.